Good morning, everyone, and welcome to the Quantum Leap Futures Morning Leap. Our morning leap is our pre-market session where we go through and take a look at the market macro to micro, take a look at the structure of the market, and then we drill down to our trade levels and our targets and our hypotheses for the day. My name is Doug McKay. I am the founder of Quantum Leap. Please read the disclaimer. Nobody here is a certified trading advisor. We are retail traders operating within a self-organized learning environment. Past performance is not indicative of future results, and any trades you see in here are for education purposes only. If you'd like to find out more information about Quantum Leap, please send me an email at quantumleapfutures@gmail.com or give me a call on my cell phone, 647-545-8065. Please follow us on Twitter at Crazy2, spelled with a K and a TOO. And if you want to see more of these videos, just do a search on YouTube for Quantum Leap Futures. There's probably about 250 days of information. So let's talk about yesterday, or actually let's go back a little bit further. 2 weeks ago I wrote that article for Rectitude Market, and we were trading down in the microcomposite with the microcomposite high at 1972.50, and we had broken out, and this was my target area up here. More specifically was the microcomposite VPOC here at 2084.25, and we finally went up yesterday and hit that level. We've got the year open below us at 2055. We've already closed this gap. We're currently trading just above this microcomposite VPOC, which was the last area of balance before they broke out on the 820. The key line above us right now is this 2097.25 area, and if we break above that, we've got our first major target at 0350 and 2106.25. And Marv and I were talking this morning back and forth. I mean, this volume profile and market profile and auction logic, do you think it works? I mean, this is a hypothesis I put together 2 weeks ago and was able to trade it and see it to come to fruition. So last night, don't need that. I put this chart in the room. We had gone up and we had taken out on the Fed news. The 84.25, made a high at 85.25, and we left this repair area right here with longer-term price acceptance down at the 2078.25 area, and then our VPOC from yesterday at 72.75. So I got short, as I noted in the room, at 81. Boy, was it ever a long, slow, grindy trade. But the idea was that we left all this area right here to be, to be repaired in the auction. We moved through it. We didn't really test this level or mature this level around a former price acceptance. So my hypothesis last night was to come down and test this main target and possibly, repair the auction all the way down. And then if we got into this distribution area, come down into the 72.75. And remember that 70.50 area was also the last price that they tried to hold before they fell out of that balance on the breakout candle of 828. So very, very good. Excuse me for 1 second. Sorry about this. This is somebody I have to take a call. Sorry about that. Just had to confirm something. So let's take a look at the news. This morning we had advanced GDP came out pretty much as expected. 1.6 as expected, came out 1.5. Unemployment claims beat. Expected 264, came out at 260. Advanced GDP came out expected 1.5, came out at 1.2. So the overall, the news coming in this morning was pretty much balanced. Didn't get any major move in the market. We popped up into, I think, 77, 77 and a quarter. We have FOMC members speaking in about 20 minutes, Lockhart. Then we've got pending home sales at 10 o'clock, natural gas at 10:30. So most of our important news is behind us, but Lockhart could say something, and the pending homes month over month could move the market as well. So I like to start my day with a macro to micro view. As you all know, I just use a simple candlestick. I use a 20 SMA and a 9 EMA. I'm looking at the slope and separation. I start at the monthly and I start working my way down. You can see that we are back above the 9 and the 20. We have 2 days left of the month right now. Our month open is 1902.50. The average daily range right now, the 20-day ATR is 26.45. There is no way in the world that we're going to move down and test the open of the month. So we basically have hit critical mass coming into the end of the month, and there's a likelihood or a probability that the bears will step aside. There's no way they can get us to a negative month, and the bulls could take control and go up and test these higher levels. I did post another chart last night. It's a bigger view, and I just want to just take a look at it quickly. If people don't think that we can't go and hit some new highs, all-time highs, I'm not saying that this is going to happen within now and the end of the year, but even with a pullback, we have on the weekly, we have this cup and handle, and if we come down, we can come down to the 2013.75 all the way down to 1968.50 area, before this pattern gets invalidated or violated, rotate back up, and our first target is 21.59. That puts in a new high, all-time high. Primary targets all the way up into 2200, 2204, 75, 05 level, and then extended target. I think Marvin was talking about some analysts talking about that 2300 level. There's 2277, 75. So this is just forward thinking as a possibility, but we have to keep these possibilities in mind, and a pullback all the way down into the 1900s is going to be nothing in terms of the upward trend that we have going in this market. The 20 SMA is all the way down here at 2000, so we're not even violating the trend line until we get all the way up here. And actually, if I draw another trend line on a longer term scale, I go all the way down from this, oh, crap. Sorry, gang. I hit the wrong button. If I draw a trend line, you probably draw it right about there. We're not even violating the trend until we get down into the longer term trend, until we get down to here. You could probably even draw one from here too. And this swing low might even give you a better view. So that takes us down into the 1800 level there. So just keep that in mind, that the overall trend is still intact, and even if we pull back, we can still come back up and make new highs without violating the trend. Going down to the weekly, we've moved back up, obviously, and got back above the 9 and the 20. We're coming up into a MA cross, MA squeeze here on the weekly. And we did violate the downward trend that we were in. Going down to the daily, we have that strong upward trend on the daily right now. We do have that naked cross down at the 1938, 1939 area. Going into the intraday, we have a possible flagpole formation in the 4 hour. So if I look at this really quickly, and again, I'm just trying to do this quickly. And take a quick look at where the possible measured move is. I like to take it to where the possible breakout is, which is going to be somewhere around there. The 61 percent is going to take us up into that 93 and a quarter, 93.50. Remember, that is a measured move that we have already from another pattern, and then the extended is going to be up here at 2102, close to that 2103 naked epoch up there. So just a real quick look at that. Come on. All right, but we closed the technical gap that we created on the FOMC news overnight. Come back and we're testing the 9 EMA. The upward trend is starting to accelerate again, and we're getting slope and separation to the upside on the 4 hour. On the 1 hour, a little bit of a different story. We still have this downward trend, but this is a downward expanding wedge. If I draw this for you, again, I don't usually do a lot of patterns in homework, but if I go like this, and then I go like this, whoops. Okay, we've got our, I could draw it to here, it's probably even better here. We've got our 3 touches here, we got 3 touches here, the next touch up here and a breakout, okay. Usually a downward expanding wedge is a pretty strong, bullish signal if they break it out to the upside. So keep that in mind as well. But the overall trend on the 1 hour that we had has been violated right now, and we're in sideways consolidation on the 1 hour. Going to the 30-minute, we do have this downward trend, but you can see that we're losing slope and separation, and we are trading just above the 9 and the 20. So this could be the mini breakout right here. So no trend on there. And then on the 15-minute, we've broken back above. This is consolidation, but we've got a little bit of a possible start of a trend upwards. And then the 5-minute, we've got ourselves a start of an upward trend. Now trading 77.75. We've got a naked cross here at 20.75 and a quarter on the 5-minute. Just write that down in your journal. Okay, so let's take a look at the big structure again. We had this area of balance. We broke out. We had this breakout. Remember, the 50% of the significant breakout candle here is 37.75 right at the CLVN right here. Then we came up here, held balance higher, closed the naked gap, held balance at this 2064.75, took out this naked microcomposite VPOC and hung around, accepted value higher, then came up and tested this level up here. We were looking for responsive sellers to step in around this area. They did step in so far, and they brought us back down, and we're currently trading around this CHVN right here, around the 78 area. We've got this area that is being repaired. The overnight repair is part of this longer term repair in this wick right here. We have a CLVN here at 80.50. That's going to be a key trading level for us this morning, and then the one below us is going to be the key line in the sand that was above us is now below us, so it's our key line in the sand below. Below the 74.25, look for them to go out and take out the overnight low at 73.25 and move back towards The 60 or the 50% significant breakout of this candle is down at 2070.50. Look where that is. That's this 2070.50 former microcomposite VPOC. I mean, I don't make this stuff up. This is, this stuff is just, golden. So if we get below the 74.25, I'd be targeting the overnight low, but I'd really be looking at a move back to yesterday's midpoint at 70.50 and possibly a move back into balance here in between 66.75 and 64.75. Above 80, look for them to go up and test this 84.25 again, and possibly come up even higher and test this, this 70 or 87.50. And that's the microcomposite VPOC that started from July the 1st until that breakout on the 20th. And then above, there's really not much above that until we get up into that 91.50 and then that 93.50 area, and then we get the 97.25, and anything above 97.25, I think you just got to get long into the 2100s and move towards that 0350, 0550, and the 2110, and then of course our RTH adjusted high at 2117. Anything above 2117, I'll be targeting 2650 and 2134. So let's take a look at our overnight, start moving our numbers over. Now, yesterday I made a mistake of erasing my drawings, so I don't have none of my levels, so I'm going to have to put them all in, but I'm going to do it very quickly. So right now we have an overnight high at 83.75. We have an overnight low at 73.25. We have an overnight VPOC, which is not likely to change, at 75. And we have this LVN right here at 77, which 77.75, which is right here as well, but it's just above the value area from yesterday. So I'm going to use the value area as a trade area, and then I'm going to use this cluster here of that 74 CLVN just below the overnight VPOC, and then just below that you've got the naked VPOC from yesterday and the overnight low all there. So anything below 77.25, I want to be short into this. And then just below there you've got the VWAP and the midpoint and the LVN. We've got a triple distribution. Actually, it's almost a quad distribution yesterday. You've got the midpoint at 70.50. You've got the VWAP at 70, and you've got this LVN at 69.75. So I'm just going to use this whole little area right here as a trade area. And if they get below there, then I'm going to be targeting these HVNs. Here's that 67.50. That was the range high on Monday. And then just below that, you've got your next LVN from yesterday at 66.25. And then below that, I'm targeting the value area low and the HVN here in the 62.25 area. Below 62.25, your first target, you want to target this 60.25. But I would really be targeting the 55. Now, our range low yesterday was 55. That was that naked VPOC. We took out that naked VPOC right to the tick, but we put it in double bottom here. So this is a week low right here. Not only that, is just below that, we've got the 2055 year open. So I'm going to actually use 2055, okay, as the number, because that's our year open. Anything below 2055, I'm targeting 51.25 as my next target, and 45.25. I'm going to use this, remember, 51.25 is the value area low from this micro composite. So I'm going to be using the 51 1/4. It's not going to be a target. It's also going to be my key line in the sand below us. Okay, and anything below that 51 puts us back into, whoops, puts us back, I don't need this right now, expand this out. Anything below that puts us back into price discovery and into this no man's zone right here that we zip through on the breakdown day and the break up day. So levels I'll be targeting is the 45 1/4 naked VPOC, the 21 1/4, or I'm sorry, 2150. Actually 21, 4150. With a major next big target below at the 37.75, which also happens to be the 50% of the significant breakout candle. All right, and then below there, we've got 31 1/4. Sorry, 31.25. 27.75. Then the next big target below is going to be down here at the 23.50. Then the 20.75. And then below that, you've got the 17.50. I know we're not going to go down here. I'm just trying to get some of these levels back in below us so they're there. 13. And then the big target is going to be this naked close at 08.50 and 07. And that's all I'll do for now below us. So above 77.50, look for them to rotate back up to the first target above us, which is going to be the 80.50. And then above, that's not a target, it's a target and a trade area, sorry. And then above 80.50, okay, we've got the overnight, and that's not the overnight low, it's the overnight high, 83.75. And then, of course, the 84 1/4, 85 area to 85 1/4. So I'm really got to go right here so it encompasses it all. And then above the 85 1/4 range high, I'd be targeting this next microcomposite VPOC at 87.50. And then there's really nothing up there until you get to the 91.50. And then our next measured move at 93.50. And then the key line in the sand above us, which is going to be right here at that 97.50. And then above that, I'm targeting, I'm not even looking at 2100. You can put a trade area there if you want, but I'm really looking for them to go up into the 2103, 2105, and then you've got the 2110, and above 2110 there was a target at 2115, but the big one will be the 2117 adjusted RTH all-time high. And then we've got all our targets above. So that's what I'm looking at. We're currently trading right here. Probably going to do some more repair work in this area, so be careful. But if we get below the 77, look for them to come down to the 75. And this is a major target down here with a lot going on. I think we need to come down here, even if we come down and bounce from here and then work our way up. But if we get below the midpoint and below that 70.50, then look for the move down here. I think we're going to get a rotational day with a little bit of downside bias today if we hold below the 77.50. If we hold above the 77.50, look for them to go out. Close the naked close. The close yesterday was 2083.75. That's our overnight high, and test this range high. And then if we break out, then I think we could get a continuation, higher into that 87, 91, and 93 area. I don't think it's going to get we're going to get a big range day today like we did on the FOMC. So I think it's going to be a rotational bias to the upside above 77.50, or a rotational bias with a downside if we get back inside a value. Take a quick look at gold. Gold continues to come down lower to search for buyers. We put that weak low in yesterday. I talked about during the day at 11:52.10. They come down and tested again. I think we're going to break below here today, and we're probably going to come down into this 11:44.45, which is where I'm anticipating the next bounce in gold to happen. If we get back above the 1160.50, then get long into the 66, 67 area, and with possible continuation up to 69. Above 69, then we got this wick to repair right here, right here, right here, right here. So there's a lot of repair work. I'd be looking for them to grind it higher up into the 74 and through to the microdeposit value area high at 79.80. Above 79.80, look for them to take out this fractal high at 83.10 and a move up into test this 89 and 91. Anything above 93 and 93.20, get long into the most accepted price going back all the way to 2008. So that's what I'm looking at. We've got 15 minutes. We're back inside a value from yesterday, so they're probably going to grind down, probably end up opening up somewhere between the 75 and the 73 level here. So if you want to take an early trade into the 75, you know you're wrong above the 77 and a quarter, 77.50 area. That's it for me, gang. As always, trade well, trade safe, and we'll catch you on the flip side.